Folks, this week's sector spotlight is going to be on the home improvement sector. Let's get into it right now. Now, February's housing market data was disappointing. There's no doubt about it. Existing home sales dropped 6.6%. New home sales tumbled 18.2%. Both tumbled much more than the forecast. This week, we're going to see the January Case-Shiller Home Price Index for January. Now, it's showing currently an expectation of an 11% jump based on the current numbers. And February pending home sales are forecast to drop 2.6%. With negative data beginning to spotlight on the weakening housing market, investors are concerned slightly about home improvement stores such as Home Depot and Lowe's. Well, according to Data Trek Research, quote, even with the significant demand increase for home improvement projects that came during the lockdown, when disposable income earmarked for travel, sports, and eating out found its way to kitchens and patios, the home upgrade cycle is far from over, they say. Based on search queries from Google Trend, Lowe's is up 11%, while Home Depot is up 14% from their 2019 peak search volume. This is very encouraging. Home furniture just recently made a 5-year search term high on Google as well. Moreover, search terms like outdoor grill are substantially above last year's levels. And so are terms like house paint and lumber, which tells me there's potentially more upside to go. The data is telling us that while many Americans are looking to travel and go out, there's still a huge percentage that wants to use the stimulus money to improve their home and living conditions instead. Now, the two big stocks that are going to get the most market share if home improvements continue to show significant demand is obviously Lowe's and Home Depot. Lowe's is up 15% year to date and Home Depot is up 12%. Both stocks are making all-time highs as we speak, which also tells me that the current inflationary pressure is not having a significant impact on either of the two stocks. What I'm also seeing is that the home builders exhibiting similar price action by ticker symbol XHB ETF, which tracks home builders that are part of the S&P 500 index. Furthermore, as I've been anticipating for several weeks now, both industrial and basic material stocks are moving higher, while large cap tech is lagging behind. We may continue to see this trend since tech stocks have a negative correlation to rising interest rates, while home builders, home improvement type of stocks typically rise with moderate inflationary pressure, which is clearly what we're seeing right now with the bonds declining and yield rising, especially in the long-term bonds. Therefore, I'm expecting more upside for both home builders and home improvement stores like Lowe's and Home Depot. Maybe a little pullback, but essentially we're going to go into second quarter with much strength and momentum. And I hope that helps.